What is so special about May 10th? We think this is the beginning of the quest for 5% interest rates. Yes, it's the beginning of the journey down to 5% mortgage rates. And while the rates will not hit 5% on May 10th, we will see over a period of a few months, mortgage rates get down to or close to 5%. So what is it about this day, May 10th, that will put us on this journey? This is the next reporting on the CPI or Consumer Price Index, which measures inflation. This particular report will give the inflation numbers for the month of April. And why, might you say, is this any different than any other month? Well, first, inflation is measured on a 12-month average. So each new month replaces the numbers from 13 months ago. For example, April of 2023 will replace April of 2022 numbers. May of 2022 will be replaced by the May of 2023, and so on. So most recently, on April 12th, the core inflation numbers for March were released at 0.4%, replacing March of 2022 was at 0.3%, and as a result, core inflation actually went up from 5.5% to 5.6% because this year's number of inflation was higher than last year's number, increasing the average. So in May of this year, on May 10th, because of the increases in the Fed funds rate and slowing the economy, we think that this month-over-month inflation will be down significantly. Credit card debt is up, savings rates are down, the average car payment is up to $800 per month, retail sales are down, and consumers are watching their spending. In fact, we think that the month-over-month reading will be below 0.3%, which will replace April of 2022, which was at 0.5%. In fact, May and June of this year will be replacing 0.6 for May and June of last year at much lower inflation readings. This is one reason why we think that rates will start to go down in May and continue over the next couple of months. Second is the shelter cost. The shelter costs are not going up as fast as they have been in the past. In fact, shelter costs, and they can consist of rental rates or owner equivalent rates and lodging away from home. And while there is still a lack of inventory for rentals, we are seeing that across the country the rental rates have crested or peaked and are starting to head back down. The shelter costs make up about 40% of the overall inflation or CPI numbers, which is a huge percentage. And because these are generally one-year leases, it takes a while for the impact of these to hit the inflation numbers. It's not like going to the grocery store where you go to the store and prices were higher from the previous month or even sometimes from the previous week. Rent is a lagging indicator, and it takes time to adjust and to see the effects of these lower rents in the overall CPI numbers. Keep in mind that this works the same as the overall inflation numbers. Each month replaces the month from 13 months ago. So at the next reading on May 10th, we think that you will see the shelter cost replaced from a year ago at 0.6% with lower numbers at maybe 0.4% or lower. In fact, over the next 9 months, they will be replacing significantly higher month-over-month rates from May of 2022 to February of 2023. With both of these readings happening on May 10th, we think that there's going to be a significant move in the CPI and the inflation numbers coming down. And over the coming months, we will see the inflation drop at a steady pace. As inflation comes down, so too will the mortgage rates. Keep your eye on May 10th, and let's hope that we're correct.